Joining us right now for more on the Federal Reserve and what looks to be an impending interest rate cut is former Fed Vice Chair Roger Ferguson. He's also the former president and CEO of TIAA, a CNBC contributor, and more than a bit of a Fed whisperer. He's been telling us all along kind of what to anticipate from the Fed as we've been seeing these things, and he's been right. So, Roger, let me ask you the two questions that Steve posed on this. How far will they cut and how fast?
Thanks for having me on, Becky. So I heard what Steve said. I think they'll cut in a series of 25 basis point moves. I think he laid out some of the rationale for that. The economy is still doing very well. Unemployment has been creeping up, but I would say only creeping. And frankly, on the other side, inflation has been coming down, but it has been creeping and uneven as well. So I think wisdom of the committee will be 25 basis points. How far will they go? I think only time will tell. Because of the question that Steve posed very clearly, they aren't really sure, and no one is, of what this so-called neutral rate is. And so they want to inch along and then let the economy and the incoming data tell them if things are roughly in balance.
You think that there is pretty much unanimity that they're going to cut by 25 basis points this next meeting?
I think it's probably pretty much unanimity on the committee. You know, the market will have different points of view. I think the market will be very focused on, incoming labor market data, ignoring the fact that Powell said they're not data point dependent, but data dependent. But yes, on the committee, I think 25 is probably where most people are centering their expectations for the upcoming meeting.
So when you hear from people who say, look, the economy is really starting to take a turn for the worse, the Fed needs to move quickly, they are behind the curve on this, they're not looking at the most recent data, what's your reaction?
My reaction is, this is a very large economy, and there are many different sources of data, many different inputs, and this is a committee that is looking for a consensus. And so there will be some people in the committee who argue what you've just said, maybe we should move faster. There'll be some people in the committee who would say, wait a minute, inflation is still well above our target. We are predicting that it will get there, but we're not sure. And so I think part of the dynamic here is a committee of 19 voices, trying to decide what best to do. And in that certain circumstance, while there be arguments on both sides, the central tendency will be more towards that 25 basis points. That'll be something for everybody. If you think the economy is weakening, we are definitely cutting. If you aren't sure how quickly things are unwrapping or unfolding in terms of inflation, then we are cutting at a moderate rate. So I think there are lots of dynamics that will lead the committee to 25 basis points, even though a few people may point to the need to try to go faster at this moment.
The Dow hit an all-time high again yesterday. S&P has had a lot of highs this year. It certainly still seems to be the perspective of the markets that we are in for a soft landing. Is that your opinion?
I hope that's the case. And what we heard from Chair Powell is the expectation of pain that he talked about a year or two ago does not seem to be necessary now. He also said something very important, which is that the Fed is not trying to engineer a weakening of the labor market. They're trying to engineer, stability in the labor market. So all of that suggests to me the odds of a so-called soft landing, fortunately, have gone up. It's not done yet, however. I mean, part of the question is going to be, if inflation proves to be a little sticky, will they feel the need to really try to soften the economy to get it back down to the 2%? So right now, fingers crossed on soft landing, more likely than not. But Powell himself did not declare victory. And I think that was very wise of him to wait and see before we say we definitely have achieved that elusive soft landing.
So that soft landing, the whole idea of it, I guess you had been a little skeptical of it happening. You sound like you're more of a believer now, too?
I'm definitely more of a believer in that. I was skeptical, as with many people at the very beginning of this, because inflation pressures, moved very quickly. There was a risk. It didn't happen. Fortunately, that it would be built in. Some of the reasons to still be concerned about inflation is that some of it is built into the housing sector. And that is a reflection not of how loose or tight monetary policy is, but of some long-standing imbalances there where, the number of housing starts has been, coming down a bit. It may be drifting back up. And so in that market, the way to get balance is to keep prices high and maybe even have them increase. So some of the challenge around inflation may be really hard to drive out, which indicates potentially that we still have a little risk for the soft landing. But yes, my odds of soft landing have gone up, as have most people, and I hope that we are correct in that assessment, because it would be wonderful for the economy and wonderful for the reputation of the Fed.